Hello, I'm Annabel Brady-Smith, Communications Director of the Association of Investment Companies. 2 years on from the EU referendum, investor sentiment towards the UK is subdued, despite recent stock market highs. Concerns about Brexit and a UK economic slowdown are ever present. But is this uncertainty justified? Or does it present attractive opportunities for active managers? To find out more, I'm delighted to be joined by 3 managers invested in the UK with large, medium and small cap strategies. Alastair Mundy, Portfolio Manager of Temple Bar, which invests in large companies. Georgina Brittain, Co-Manager of JPMorgan MidCap. And Neil Hermon, Fund Manager of Henderson Smaller Companies. So let's kick things off. Neil, what impact is Brexit having?
Look, it's hard not to argue that Brexit isn't having an impact. The UK economy is growing the slowest of the G7. Consumers are under a bit of pressure. We're seeing a fairly moribund second-hand housing market, weakness in things like second-hand purchases of cars and carpets and furniture. However, not all doom and gloom. UK corporates are in good fettle. Balance sheets are strong. Earnings growth is good. We're seeing a lot of inward M&A into the UK equity market. UK corporates are investing, they're hiring and getting on with it. And actually, things aren't that bad.
So some positives and negatives there. Georgina, what's your perspective?
So I think I'm very much in the same camp as Neil. We focus very much on our companies, how they're doing and how they're finding life on the ground, rather than worrying about the big picture. And I think you'll find most mid and small cap fund managers will do very much that.
Sounds like a sensible attitude. Now, Alastair, what's your view on Brexit?
Well, I think the point is that we're still going to be here post-Brexit. The UK economy will still be spinning, and we're very lucky because of the language, the time zone, the big financial services industry we've got, that the UK economy will still be strong. But the question is, how weak will it be during the transition period? And I think that for all of us, the question is, will our companies be able to get through that period? And they may even get stronger through that period as competitors weaken. So there will be volatility, but there will be opportunities as well for our companies.
Great. So where are you finding opportunities at the moment, Alastair?
Well, in the big cap space, we particularly like the large banks. They've been through an extraordinary 10 years. Where the financial crisis was a real biting point for them. The regulators given them a very hard time since, but now they're back. They've got very strong balance sheets. X all the fines they've been paying, they're still very profitable businesses, and our ambition for them is to be dull and boring. We think they're going to be able to generate good dividends, and those dividends could be quite dependable because of the strength of the balance sheet. So we're excited about the future for those companies.
Great. So it's banks for you. Georgina, where are you finding opportunities?
We're finding opportunities all over. I mean, one of our key areas of focus is tech, but unfortunately there just aren't that many tech companies within MidCap anymore. Overseas earners is something that we've focused on post the Brexit vote, but actually we're also finding definitely that there are domestic companies that we're very interested in. For example, the challenger banks, so rather than the large banks that Alastair's just talked about, companies like Charter Court Financial and One Savings. And we're also finding niches that a lot of people won't touch. For example, the brick companies. We know we need to build more houses in this country. So again, another area of interest for us.
Oh yeah, they do sound interesting. Yeah. Neil, where are you finding opportunities?
I think the great thing about smaller companies, there's so much choice. So obviously, over 1,000 listed UK smaller companies, so fantastic ability to look at new investments. We're actually growth investors. We're looking for companies with high quality growth that can deliver returns over the longer term. Interesting source of new opportunities, the IPO market. Those companies coming into the market for the first time. So interesting new opportunities, companies like Integrafin, which is a kind of B2B platform for IFAs, or some of the new software games developers like Team 17 and Codemasters. So these new interesting opportunities are coming all the time to our market.
So lots to be optimistic about, really. So now, Georgina, which areas don't you like, and how have you positioned yourselves against those?
Well, I just mentioned earlier that we liked overseas earners and have got quite a focus in the portfolio on those. Conversely, we're less keen on UK companies that are exposed to the UK consumer. So, for instance, we're extremely underweight travel and leisure. We don't own a single pub company, for example, because we just are worried that the consumer just doesn't have that many pennies in its pocket at the moment. So that would be a key area of focus.
Interesting. How about you, Alastair? What don't you like at the moment?
Well, we find quite a lot to worry about around the world. So we don't like the high valuations in the US. We don't like the future for Europe. We don't like the huge amount of QE we've seen, and we don't like the size of the Chinese credit bubble. So Brexit seems quite insignificant relative to those concerns, I think. So what are we doing about that? We've really got no mining companies in terms of industrial miners, but we have got precious metal miners. We've got gold and silver bullion as well, and we've got quite a bit of cash on the portfolio because we think a market shakeout is quite possible. Even though the UK market is very cheap internationally, won't necessarily be the hardest hit of markets if there is a shakeout.
Oh, well, that's good. That's good. Now, Neil.
I'll give a lot what Georgina said actually. Essentially, we are quite cautious on the UK consumer. A lot of pressure there really with low wage inflation and cost of living going up. One area we are underweight in is the general retailers. Clearly a lot of pressure currently with the shift to online spending, high cost of rent and staff. You've seen all the recent examples like New Look and Cartwright and Debenhams today, for example, warning. So it's an area we're definitely underweight in.
Right. Now, so bearing that in mind, what's your outlook for the UK market, Georgina?
So I think in terms of our companies and the companies we're invested in, I think you can hear that we're positive. We're very positive, and we choose to have gearing within our investment trust today. We focus on that rather than the larger picture, and I think it's a lot easier to do that. It's a lot easier to find companies that are growing, doing better than expectations and delivering greater than the market expects, rather than trying to work out what the outcome of Brexit is going to be.
That I can understand. Neil?
I think the UK market is cheap. It's cheap compared to international stock markets. It's cheap compared to its own history. Certainly it's very unloved by international and domestic investors, so very underweight. We're seeing corporates in good fettle, balance sheets are strong, M&A, a lot of M&A happening. We're seeing a lot of foreign corporates buy UK corporates at this point in time. So we're seeing a lot of takeover premiums, particularly in mid and small cap markets. So the big picture isn't too disastrous. And as Georgina said, lots of specific examples of us to look at in terms of individual stocks which can deliver returns.
Yeah, and definitely some positives in terms of valuations of the market. Alastair, what's your outlook?
Yeah, I think the point that Neil raised about how out of favour the UK market is internationally. We may talk about as Brexit as UK investors and get a little bit nervous. Imagine how nervous you are if you're overseas, and it sounds like the scariest thing that's ever happened to the UK economy. There's a very good reason for not investing in UK companies, those investors think, until we're through Brexit. So yeah, you can imagine more money being directed towards the UK market over the next couple of years as everything becomes clearer.
Thanks very much, Alastair. The world is going to keep spinning post-Brexit, and we'll still be here in the UK. Alastair, Georgina, Neil, I'd like to thank you very much for joining us today. It's interesting to hear our managers' views on the prospects for the UK, but I'd like to emphasise that we don't know what's going to happen in the future. Investment is for the long term, and you need to have a well-balanced portfolio. If you are in any doubt, you should talk to a financial advisor. Thank you so much for watching.